Is it a good idea to invest in Tesla? Imagine a world where cars drive themselves, where electric vehicles dominate our streets, and where a single company's vision reshapes not only the automotive industry, but the entire future of transportation. Well, this is Tesla's world. Tesla's journey has been nothing short of extraordinary, and now this once small electric car startup transformed into a technology powerhouse that's revolutionizing multiple industries. However, with the stock price reaching new all-time highs and competition intensifying, many investors are asking the question, is Tesla stock still worth buying? Before we answer this question, let's dive deeper into Tesla's story and understand their business model and their financial health. 20 years ago, when Martin Eberhard and Mark Tarpenning founded Tesla Motors, the electric vehicle industry was barely an afterthought. At the time, combustion engines ruled the roads, and the mere idea of a premium electric car seemed almost laughable. But these visionaries saw something others didn't. They saw a future opportunity. And when Elon Musk joined the company in 2004 as chairman of the board, that future started taking shape in ways no one could have predicted. The company's journey hasn't been a straight line to success. Their first vehicle, the Roadster, began production in 2008 inside a former Chevrolet dealership. It was quite a bold start. A high-end sports car that proved that electric vehicles could be both powerful and desirable. But Tesla's ambitions were much bigger than just producing high-end luxury sports cars for a niche market. As flash forward to today, and Tesla isn't just another car company. They've revolutionized the entire automotive industry, forcing century-old manufacturers to pivot their strategies and embrace electric vehicles. And they've now expanded their lineup from the original Roadster to include various models like the Model S, Model 3, Model X, Model Y, semi-truck, and Cybertruck. And out of all of these models, the Model Y became the best-selling electric vehicle in history. Not only that, it is also the best-selling vehicle of any kind today. But to understand if Tesla is still a good investment, we really need to look beyond this headline-grabbing achievement and dive deeper into the heart of the company. Let's start with Tesla's business model, which basically breaks every single rule in the traditional automotive playbook. Unlike other manufacturers who rely on dealerships, Tesla actually sells directly to customers, which allows them to cut out the middleman and control the entire customer experience. In other words, more positive customer experience means more sales and better company reputation. And that is incredibly important, as overall customer experience is a very fundamental factor for investors. And to be fair, Tesla does a really good job at this. I actually had the opportunity to experience this myself when I drove a Tesla a few years ago. And quite frankly, the entire experience was fantastic from start to finish. And if it wasn't due to some limitations, I might have considered getting one. And this direct-to-customer approach also gives Tesla something quite invaluable, and that is data. Every Tesla vehicle is connected to the internet and is constantly sending information about how it's being used, which in return allows the company to improve their products in real time. But Tesla's genius doesn't stop there. They also use this thing called vertical integration, meaning while most automakers outsource 80% of their components to suppliers, Tesla develops many critical components in-house. And that includes batteries, motors, and software. Now, this approach might seem a bit more expensive at the start, but it actually gives Tesla quite a great control over their supply chain, and that allows them to innovate at a pace that basically leaves competitors in the dust. By the way, if you are enjoying this video so far, then I'd be very honored if you can click on that subscribe button, my friend, so that I can make more videos for you. Moving on. Right, numbers. Well, check this out. In their latest quarter, Tesla reported $26 billion in revenue, marking a 7.8% increase year over year. And for the profit margin, that was 13%. Quite impressive. For comparison, traditional automakers like Ford and General Motors typically see margins of around 5 to 6%. So as you can see, Tesla is doing pretty well on that front. And And despite recent pressures from price cuts and increased competition, they still maintain margins that are among the highest in the automotive industry. But to truly understand Tesla's financial health, we also need to dive into their balance sheet. And at the time of recording this video, Tesla holds $29 billion in cash and short-term investments, which is up 31.8% from the previous year. This is good news as it gives them incredible flexibility to invest in new technologies and expand in their production. Their current assets currently stand at $106 billion, with only $43 billion in total liabilities. In other words, the company's debt levels are very manageable, with a total debt-to-equity ratio that's been steadily improving over the years. Now, looking at their income statement, we see a company that's not just growing, but also transforming. While most people think that Tesla is just another electric car maker, there is another revolution happening quietly in the background. Through their energy subsidiary, in 2023, Tesla deployed an impressive 14.7 gigawatt hours of battery storage products. That's a 125% increase from the previous year. Basically, their Powerwall home batteries, Megapack industrial storage system, and solar solutions are becoming a core part of Tesla's identity. When you combine this with their virtual power company in Texas, you somewhat start to see Tesla's true vision. They're not just a car company that dabbles in energy. They are building the foundation of a completely sustainable ecosystem. And the proof is in the numbers. The gross profit of their energy division surged to $1.1 billion in 2023, showing that this transformation is already paying off. Another area for Tesla's future plans is their broader ambitions for autonomous driving. The company has announced plans to roll out ride-hailing services in Texas and California in 2025, positioning themselves to compete with directly established players like Uber. They also unveiled concept versions of two autonomous vehicles, the Cybercab and the Robovan, which they envision as integral parts of a future Tesla network ride-hailing system. And finally, one more thing to look at is Tesla's very strong cash flow generation. They're generating roughly $5.5 billion in operating cash flow every quarter, providing them with great resources to fund their future growth plans. This financial strength is particularly important as Tesla continues to invest heavily in research and development. Because of course, the most exciting part about analyzing a company for investment is to see whether it will keep growing in future. So if you are taking notes, then there you have it. Some important events to look forward to this year. However, is that all? You see, my friend, no investment story is complete without considering the risks. And Tesla does face some challenges. The first one is the regulatory environment. Tesla's relationship with China, which represents 20% of their revenue, has become quite complicated due to US export controls. But aside from that, there is another risk that a lot of investors are currently worried about. You see, one of Tesla's biggest strengths is Elon Musk.
Hey everyone!
But equally, one of Tesla's biggest weaknesses is Elon Musk.
Hey everyone!
Let me explain. If we look at this from an analytical point of view, rather than a political one, there is no denying that Elon Musk has excellent track record of delivering long-term value as a CEO, and Tesla certainly thrived under his leadership. But at the same time, there is also no denying that a lot of mixed political opinions about Elon Musk are on the rise, particularly with the X takeover scandal and the close relationship with the current US President Donald Trump.
Hi everyone!
But does this relationship have a good side? Well, to explain that, we need to take a close look at Tesla's performance since November last year. And what happened then was a clear example of an intersection between business and politics. After spending most of 2024 in a relatively modest territory, Tesla's stock surged by almost 63% in the fourth quarter, with the bulk of those gains coming from Donald Trump's election victory. And who is endorsing all of this? Well, none other than Elon Musk himself. Elon Musk has invested heavily in this relationship, with reports indicating that he spent hundreds of millions supporting Trump's campaign. And Wall Street analysts have taken notice of these political dynamics. For instance, Mizuho Brokerage updated Tesla's stock from hold to buy, specifically citing an improving outlook under Trump's administration. It's pretty clear that a lot of people think Tesla's political moves could turn into business advantages. So, is it a good idea to buy Tesla stock? Well, that really depends on how you see it and how long you plan to stay in the game. The company's valuation at the moment is all about big expectations for future growth. And with the current price-to-earnings ratio of about 100, way above the industry average, it's quite clear that Tesla is a little bit overvalued at the moment. When you dig deep into these numbers, however, Tesla's return on equity and return on assets are getting better, which shows they are using shareholders' money more efficiently. Their debt is under control, and they've proven they can generate solid cash flow from operations. All of this points to the company that's focused on long-term success, not just quick wins. So no matter what you decide, just remember this. Tesla has stopped being just an electric car a long time ago. Their energy storage business is growing, and their work in autonomous driving and robotics could open up new revenue streams. Plus, with plans to expand manufacturing through more gigafactories, they are set to stay on top of EV production while cutting costs with economies of scale. And with the big year coming ahead, will it be worth giving it a shot? Let me know what you think in the comments. And as always, this is not financial advice. See you in the next video.